first half of 2025 saw markets test our patience, test support levels, and then surprised us with a sharp turnaround. But was it really that unexpected? In this special mid-year review, we unpack what drove the market mood, which sector stood out, and what the second half might hold. And joining me for this deep dive is our market expert here at Axis Direct, Akshay Chinchalkar. Hi Akshay.
Hi.
Glad to have you here in the podcast. So let's just dive right in. We go to our first question. So in March this year, you published a report where you called out there were signs that the market was bottoming out and there were new opportunities emerging. What were you really seeing? What made you call this out? Could you elaborate a bit for our audience?
So actually 4 things. One was people panicking and selling out because the market was down and down big. Second was a lot of technical support coming in between 21,700 and 22,000. So any chartist who was looking at the chart was aware that that was an important area of support that the market had to hold.
Okay.
Historically, the markets have shown a tendency to bottom out in that March to April period, and we were in the early part of March. So that was another catalyst. And obviously valuations, which were a lot more attractive compared to, when the market was at the September peak. So all of these things came together and gave me a very strong message that we are close to, the end of this bear market, so to say.
Akshay, you mentioned seasonal effects. Could you elaborate and explain in simple layman terms what does this mean? And also, when you were observing these things on charts, etc., what was it that you really saw that made you believe that the market is likely to bottom out and going to start rallying?
That's a great question, Ashley. I think seasonality as a concept is something that people have spoken about a lot in the US. So it's like a commonly used point of analysis if you look at the developed world. In India, I think seasonality as a concept became popular around COVID, and now people have latched onto it, and it's become a part of almost every discussion that at least I've had with people. First, I'll explain the concept for the sake of our audience. Seasonality is something that occurs with, a reasonable frequency during a particular period of time. I think the simplest example of this effect is consumer spending and how it goes up every time during festival season. So we know that, speaking of the calendar year, Q3 and Q4, you have a lot of festivals. And people spend, there's a lot of discretionary spending that people do, and obviously the, spending goes up.
Correct.
That is really the layman example of what seasonality as a concept really means. Now, coming to the Nifty and what was interesting in March, like I said before, right? March and April, the market has shown this tendency to typically bottom out, even if January and February have been, down months. But we were, in early March, and everybody was thinking as to whether we were going to get a bounce or not. So I looked at 10 years of data, and 10 years because in the last 10 years, the Nifty has gone through all 3 regimes. We've gone up strongly, we've gone down strongly, and we've gone sideways for a bit. And that is generally a good period to back test any strategy or anything that you think needs to be tested.
Okay.
So then I ran the analysis on the daily data for about 10 years, and I realized that in quarter 2 of the calendar year, the Nifty has historically rallied 80% of the time and on average has jumped 5%. So the data also showed that Q2 was going to be good. And then we had all of those 4 factors coming together towards the early part of March. And that convinced me even more that I've got data backing what I'm thinking anyways.
Yeah.
And that's how there was more reason to believe that a bottom was due.
I remember reading something very interesting. You spoke about what the market did in odd years and also after the first year of the presidential election. What was that all about? And is the market behaving like you expected it to?
So 2025 actually was going to be a very interesting year because of 2 reasons. One, the year ends in an odd number, 5. And the other, because it was going to be the first year after presidential elections in the US. So I took the odd number effect first, and I realized that if you look at the data all the way from the turn of the century, so 2001 till date, the Nifty and the mid-cap indexes have gone up 80% of the time in a year ending in an odd number with double-digit gains on average. Then I looked at what happens after US presidential elections.
Okay.
And again, the conclusion was the same, where it said the Nifty has shown this tendency to rally 80% of the time in the year immediately following US elections.
Okay.
So then I went back and I said, okay, sentiment is very negative. Everyone's panicking, but seasonality is very supportive. And therefore, I thought the evidence was growing that we were going to bottom out and rally, which is exactly what's happened in the last 4 odd months.
Interesting. Akshay, now let's talk about sectors. Which sectors did you think were going to rally? And did that actually happen?
So based on our models, we saw 4 sectors that were showing a lot of promise. They were lenders, automobiles, realty, and energy. And since the March lows, each of these has advanced about 20% in 4 months, which I think is very impressive. I would also like to tell our audience that we track, sector seasonality very, very closely. And every week we publish what we call is a sector seasonality report that talks about what sectors are going to do well in the coming week based on what has happened historically. So Ashley, I would advise all of our viewers to keep an eye out for our weekly sector seasonality report, which is sent by email and is also available on the website.
So Akshay, the Nifty is off around 6% of its record highs. Do you think we will scale new highs by the end of December?
So Ashley, history suggests that by June 2026, which is about a year from now, we will have made a new high, speaking of the Nifty. And I'll tell you why. There are 2 models that we looked at and both gave us the same conclusion. So I'll start with the first model, where we said, I want to look at historical instances when the Nifty has fallen at least 15% from an important high.
Okay.
And then has recovered at least 15% within a 12-month period.
All right.
And I use this template because this is exactly what happened between September and June. And what history told me was that if you look at data since the start of the century, so you have about 25 years of data, something similar has happened 13 other times.
Okay.
And in 77% of the cases, 12 months forward, the Nifty was up an average of 15%.
Interesting.
So the verdict was very clear that if this template is similar to what's happened historically, then there is reason to believe that the Nifty is heading a lot higher. And like I said, the average jump over the next 12 months has been 15%. Now, averages can be deceptive, but they are the best predictor of future returns. So let's just say 15% from 26,000 would get us to about 28,000 or 29,000 by July 2026. So that was the first model. The second model used the 200-day average, which a lot of people, keep talking about, right? It's a part of any conversation on the markets. And particularly for the Nifty, foreign investors look at the 200-day average very closely.
Okay.
So then I saw what the market had done, beginning September, ending June, a 9-month period. And I saw that at the lows in March, we were roughly 8% below the 200-day average. So the mood was firmly bearish. And then as the recovery took hold, we rallied so strongly that we went 6% above the 200-day average. So then I said, the same thing. When was the last time we swung from -8 below the 200-day to plus 6% above the 200-day? And looking at 25 years of data, I realized we had more instances of that happening compared to what had happened with model number 1. So this time there were 31 cases where something similar had happened. And in 26 out of those 31 cases, the Nifty was higher by 25% over the next 12 months. So you see, whether it's model 1 or model 2, the conclusion was the same, right? The data showed that you had to turn bullish. And so June 2026 is when I'm thinking. So between now and then, we've got about 11 months. I think our target of 28,000 or 29,000, which will obviously be a new high, is very much in the offing. So actually, regardless of what the models say, and both, like I said, have been bullish, I mean, there's a lot of, news flow these days with Trump and tariffs and geopolitics. I think unless there is some unknown that nobody is aware of, I think the sky is going to be blue. So firmly bullish based on the data.
Okay, excellent. What is that big Nifty support level such that if it breaks, you will reassess your bullish stance?
Yeah, so currently the mood is bullish. We've seen a dip in the last, few days, but given how much we've rallied from the March lows, we're still bullish. I think immediate support sits between 24,500 and 600, and we've tested those levels in the last couple of days. even with the 25% tariff announcement on India. And those levels have still remained intact. So there's no technical damage per se. If we break through 24,500, then I think 24,200 is where a lot of nervousness will creep in.
Okay.
The bullish case then will be on thin ice. But I think, if we continue lower and break under 23,800, all of the bullish scenarios will require like a serious relook. So I would say 24,500 to 600 for now. 24,200 where you're really starting to live on borrowed time. But under 23,800, we have to bring those, end of the world scenarios back into our view.
In terms of valuations, are there any sectors that look attractive? And do you think there are any which will surprise us on the upside?
So banking and financial services, telecom, hospitals, and interest rate proxies are what we are betting on as a house. We also think that retail consumption and FMCG could be good opportunities because of the recovery that's expected in FY26. So yeah, these are some of the sectors that I think will drive alpha going forward.
For our viewers, could you explain interest rate proxies?
Interest rate proxies actually are sectors which typically are tied to the rates cycle. So the RBI has been very vocal about how they want to protect growth, particularly in a scenario where inflation is heading south. So, and inflation has actually showed signs of, going lower. And therefore, there is more ammunition with the RBI to continue cutting rates. If they do so, then there are sectors that will benefit from that, rate cut cycle. So, like I said, sectors which are expected to underperform when rates go up, and sectors that are expected to outperform when rates go down, these are known as interest rate proxies.
Akshay, moving on, what about tariffs, inflation? Do you think the Fed will cut rates this year? Also, what do you think will be the impact on currency, on markets?
So tariffs are an evolving situation, Ashley. I mean, so much of announcements coming through from the Oval Office. He said I was going to put like 25% tariffs on India, but that could change. So the fate of the markets, tariffs will happen. They're coming. The exact numbers, knowing Trump, nobody really knows what the final number is going to be unless it's been announced officially. But I think the fate of the markets really depends on policy. And so I want to talk about the RBI first, right? I said earlier that, the governor recently made it very clear that if inflation continues to fall, or if growth comes under, some duress, some risk, then the RBI is very clear it wants to cut rates. But will they continue to, steer policy independent of what the Fed is doing? I don't think that's going to happen.
Okay.
The Fed in its latest meeting said they were not going to cut rates. Before the end of the year, the market is still betting on 2 rate cuts. One in September, which is also like a 50-50, and one in December, but nothing beyond 2 for now.
Okay.
Yeah. The announcements on the tariff front have obviously created a lot of nervousness in the rupee market, Ashley. Because the all-time low for the rupee was 87.58 in February. Yesterday, we came very close to breaking through that. So a lot of people are now starting to talk about 88 and 90. It's an evolving situation and we have to monitor that on a daily basis. But coming to the Nifty, given how the market has reacted to the recent announcement, I think there is still a lot of bullish sentiment out there. So we have reason to believe that 28,000 to 29,000 in the next 12 months is happening.
So gold and silver have been hogging all the headlines. What do you think they will do in the next 12 months?
Yeah, precious metals have been on a tear, right? Everyone's looking at them, wanting to invest in them. I'll take gold first. Gold has been going really nowhere in the last couple of months. It rallied to a record high of $3,500, and since then it's just been, spending time doing nothing. And 30 to 50, I think, is support that really matters on the downside for spot gold. We are of the view that as long as we don't drop below that level, $3,600 to $3,800 is what's coming. And if that does, it's going to be a record high. On silver, that $50 level has marked a couple of long-term peaks in the past. And we are currently trading around 39. Plus, a lot of chartists are saying there is a long-term cup and handle formation that's occurring on the chart of silver, spot silver. So if that is the pattern that plays out, then $50 might become a reality in the next 12 months. Speaking silver, last August, we put out a report where we looked at the trends in the MCX silver contract. I remember it was back at 78,000 then, and we had an objective of 110,000 to 120,000. We achieved the first objective and are very, very close to achieving the second as well. So that feels good.
Akshay, before we end this podcast, any final thoughts that you have?
Yes, Ashley, three things. One is focus on quality. Number two, know your risk and be patient. Look, with Trump in his second term, volatility is not going anywhere, right? It's going to stay. But the important thing is know what to get into. And I still believe the Nifty is going to make a record high. Like I said, in the next 1 year, it's just a question of when, not if.
Thank you, Akshay. That was truly insightful. We're halfway through and it's already been a year to remember. If you found this helpful, do like our video, share it with your fellow market watchers, and subscribe to our YouTube channel, Access Direct, for more insights and updates. Until then, happy informed investing.
Investment in securities market are subject to market risks. Read all related documents carefully before investing.